Hello and welcome to another video by REITspro.com, a site for insightful articles, videos, and a lot more stuff on REITs and InvIT investing in India.
Welcome back to the second part of a two-part series on taxation of REITs and InvITs. If you've not already subscribed to our channel, please do so. So if you have seen the first part, you can go right ahead, or I would request you to please go back to the first part of taxation of REIT and InvITs that we had released some time ago. And just to recap, we are looking at the point of view of the Indian resident and the withholding tax and other conditions that are mentioned thereon. You can pause and see here. Filing tax returns for your regular incomes is a little typical in REITs, and to remember that they are business trusts and those are the rules that will apply. And the returns for selling your investments in REITs will be as per normal norms which are there for equity investing, with a little difference in the period of holding, which we have already highlighted in the part 1. And today we would cover the periodic returns in detail. As we had described the last time, the periodic returns are called distributions, and they are categorized either as dividend or interest or return of capital / amortization of loan of SPVs and rentals. And we had also mentioned a little bit about why this is done, why this complication. So one part that we would like to point out right now is the functionality. So what happens is that when you have a REIT structure, which is given here, there is a certain infusion of funds which happens from top to bottom, and the returns flow from bottom to top. So depending on how this flow from bottom to top is and this infusion of funds is, the categorization differs between whether it is a dividend or interest or return on capital and so on. And if the assets are held directly under a REIT, then it is rentals, which is not the case today in India. So if you have a structure like this, well, we can go on this, but then since it's a taxation video, so we will focus on the tax efficiency. As we had seen earlier, that the Mindspace REIT has a 90% plus tax-free component, and the Embassy REIT has a 80% plus tax-free component. So that this kind of structuring gives you a lot of room for tax efficiency also. And the focus of most REITs is on maximizing these two highlighted ones, which is the return given out as dividend, which is tax free, and tax free return is given out by the SPVs not opting for a concessional tax regime. And the second part is how the amortization of loans of SPVs is done. So once a REIT concentrates on these two aspects, then a lot of the payouts given out happen to become tax free. And how do you know which type of income is being given out by REIT and InvIT? So there are two documents that you can always access as an investor on REIT and InvIT units. The first is a distribution advice, which is given out periodically. So this is a snapshot of a distribution advice, and I had already given this on the same video which is mentioned here. And the distribution advice is for the periodic returns that you get. The second thing is a form 64B, which is given out after every year at the end of the year for the complete financial year. And there also the categorization of distributions is mentioned clearly. So you really don't have to worry about what will be the categorization. You can actually rely on the form 64B, which will be available to you at the end of the year before you file your tax returns. So on this slide, we show you here the categories of distribution. So the categorization could be as interest, type 1, type 2 could be as dividend tax free if the conditions are met as are given below. Thirdly, taxable dividend. fourth, return of capital, and fifth, rent. So the first one, interest of categorization as interest. So the taxation here is as per the tax slab, and the TDS is 10%. Interest income from SPVs on shareholder loans and debt securities would be taxable in the hands of unit holders at tax rates applicable to such unit holders. The second one is distribution as dividend, which is tax free. Now, dividend income from SPVs not opting for special tax regime introduced under section 115 BAA of the Act is exempt in the hand of unit holders, and therefore there is no TDS and no tax. The third category of distribution is taxable dividend. Here, naturally, TDS is deducted at the rate of 10%, and the taxation of dividend is as per the tax slab. However, there are very few REITs and InvITs which are looking at this. For example, the PG InvIT has a small portion coming in as taxable dividend also. The fourth category is return of capital, which is also amortization of loans to SPVs. Now here, this is also a large part, and there is no TDS and there is therefore no tax. So as is written here, no tax is deductible on amortization of debt paid to unit holders, and amortization of debt is something that is received from SPVs towards repayment of loans given by REITs to SPVs, and that is what flows upwards to the unit holders also. We'd like to take a little more time on this fourth type of return, which is return of capital. Now, there are varied opinions, and this is the first one is a snapshot which says that the section 48 of the Act does not require adjustment on account of amount received by business trust as amortization of loan from SPVs, and therefore no deduction from cost of capital of acquisition of units is held. And the second one says that it could possibly reduce the cost of acquisition. So you need to really take advice from your tax consultant, and please leave a comment here and let me know what you feel about this. The fifth type of income is by way of rentals. And rentals, they are not there currently in the structure of REITs which are there in India or in WITs. The assets are held mainly in SPVs. So as such, the rental income will be taxable in the hands of unit holders at applicable rates. Thank you so much. Please subscribe to our video if you like it, and do stay connected. There's a lot more that is coming up on many other aspects of REITs and InvITs. Thank you.